All right, let's take a look at FedEx releasing its latest earnings results. They're looking at shares off just about 5% here in extended trading. A mixed report from the company. Revenue missing expectations, $21.9 billion. They did beat, though, on profit. Adjusted EPS of $4.94 for the quarter. The estimate was for $4.89. In terms of the guidance, full year or 2024 adjusted EPS guidance coming in a bit light. The street was looking for $18.31. FedEx giving a guide of $16.50 to $18.50. So at the lower end there of that range, disappointing the street. We're looking at the stock off just about 5% here in extended trading. Also big news out here in terms of an executive shakeup. CFO Mike Lenz, he is going to retire. That's effective at the end of July, on July 31st. Now the company is saying that an external search is underway for a new CFO, but CFO Mike Lenz retiring effective July 31st.
All right, joining us now for more on FedEx earnings is Peapack Private Wealth Management Managing Principal and Senior Portfolio Strategist David Dietze. Let's first start with that fresh news about its CFO planning to retire. David, what do you make of it?
Well, it's never good news when a CFO retires. It's one of the most important positions in a company. We need to get a little bit more insight on that. But of course, it is in the context of a major restructuring going on at FedEx. They've been under pressure from activists and trying to deal with a fall off in demand post-COVID-19. And so they're trying to get several different divisions in FedEx down into one. And maybe the CFO wasn't quite on board. So we need to learn more, but at first blush, it's certainly not a positive.
David, you're a shareholder here of FedEx. How are you looking at some of the changes that the company has planned to make or has really made so far in terms of the cost-cutting efforts? But still, though, that 2024 adjusted EPS guidance coming in a bit light when you compare it to the $18.31 estimate that the street was looking for.
Well, certainly we'd like the restructuring and efficiency efforts that's going on. You know, the One FedEx movement where they're going to consolidate several units, FedEx Ground, FedEx Express into one, makes all the sense in the world. And of course, this is also in the context of belt tightening because, of course, everything got bloated and very comfortable during the pandemic boom of everyone ordering online. But now we're getting past the pandemic, there is a drop off in demand. So that's another reason why it's so important to cut these costs. In terms of going forward, there's initial disappointment here, but I really want to learn more as to what the basis is for their reduced guidance here. Is it concerns about the macroeconomy, geopolitical issues, inflation, potential recession, or are they starting to see some resistance in terms of the traction that they're getting with their cost-cutting efficiencies and so forth? That's what we want to look at closely. Is it a read for the global economy, or is it more company-specific?
Let's talk about revenue. So revenue came in weaker than expected, David, speaking of the economy. And we know FedEx, like UPS, considered an economic bellwether. What does it tell you about the state of the consumer?
Well, certainly, particularly at the lower end, consumers are feeling inflation. There's just no question about it. And so I think there is a drop off in demand. But of course, you also have to tease out the changes in people's buying habits post-COVID-19. You know, when we were all locked down, everything we did was sit around at home and order online. FedEx brought it to our door. But now, as we're getting past that, people are enjoying getting back out to Main Street, getting back out to the mall and doing their shopping in person. Obviously, that does not help FedEx's demand. So, you know, to that extent, you can say that's not FedEx's fault. That's just part of the macroeconomy. They won a lot during COVID-19. Now there's a little bit of a payback.
When it comes to their forecast here for flat to low single-digit revenue growth for fiscal 2024, how is FedEx positioned, or how does it stack up against its obvious large rival out there, UPS?
You know, it is a nice duopoly. And of course, they have DHL, this part of the troika of competitors over in Europe. So it's a very cozy relationship. Of course, what we're seeing here is that inflation and wage pressures abound here. And that's going to put a lot of pressure on the bottom line. And so UPS, of course, has already announced that they're soon to go into contract negotiations. I think FedEx has one big advantage over UPS because they're not unionized. Nevertheless, their workers will be watching closely what the opportunities look like over at unionized UPS. That will put pressure there. In terms of the top line, with the Fed potentially raising rates twice more, with several major economies around the world like China and Japan staying very loose on their monetary conditions, it's hard for them to get too aggressive about what they see in terms of global demand going forward. I like the idea that they're staying a little bit more conservative. Potentially they can beat going forward.
So, okay, David, the stock obviously taking a hit, a knee-jerk reaction before the earnings call. Do you still like it as a like its valuation where it stands right now?
Yeah, short term, I'm just a little cautious. This is a stock which has reported earnings and revenues down year over year. And yet it's up 34% year to date. It's up 48% since they had a big earnings shortfall in September. And so, it's hard for a stock just to keep going up more than 30% when they're reporting negative year over year results. So I think a little give back was to be expected. Of course, the overall market's had quite a run here. Nevertheless, historically, FedEx, of course, as a logistics company, is a cyclical player. It sinks from a lower valuation to a higher valuation. Historically, the stock has risen to the point where it's about 1 to 1.9 times sales. Right now, it's just about 70% of that. So I think longer-term investors can be rewarded. Of course, FedEx has a system that just can't be duplicated. It's been around since the 1970s. It's seen a lot of ups and downs. It's going to weather whatever the global economy throws at it. So I like it as a long-term core holding in people's portfolios.
All right, David Dietze, we appreciate the deep dive on both the earnings and, of course, reaction to fresh news of CFO Mike Land set to retire. Thank you so much, David.